Today I'm going to do a video on analysis and interpretation. Just before I start this, just to remind you, when you're answering questions on analysis and interpretation, two very important things. First of all, answer in point form, but even more importantly, make sure you quote actual financial indicators in your answers. Okay, the first thing tells you, are the following statements true or false? And quote a relevant financial indicator. The level of financial risk has increased from 2023 to 2024. When you're looking at your level of risk, you're looking at your debt equity ratio. And if you have a look here, last year the debt equity ratio was 0.4:1. In other words, for every 1 rand to own capital, we had borrowed 40 cents. This year, it's 0.6:1. So now for every 1 rand borrowed capital, owned capital, you have borrowed 60 cents. So that statement is true because the debt equity ratio has increased from 0.4:1 to 0.6:1. Mr. Idle will be satisfied with his return on investment in 2024. Here you're looking at return on average owner's equity, and they tell you it's 3.5%. But if you look at what you could get if you invest your money in a fixed deposit, that is 6%. So that statement is false because he could get more if he just left his money in the bank. So he's only earning 3.5%, which is less than the interest rate of 6%. The next one, the business is solvent in 2024. We now look at our solvency ratio. That's 1.9:1. As long as this is 1:1, you're solvent. So that is true. Your solvency ratio is 1.9:1. And then the last one here, the business can repay current liabilities without selling stock. If you have a look here, you need to look at your asset test ratio. If your current ratio, which includes trading stock, is 2.3:1, but when you exclude trading stock to get to your asset test ratio, it's less than 1:1. You're left here with debtors and cash. If you take all your money from your bank and all your debtors pay you back, for every 1 rand current liabilities, those two things combined is only 80 cents. So that statement is false because your asset test ratio is below 1:1. Okay, then the next thing you're asked to do is to calculate net profit, and they give you average owner's equity of 525,000. Okay, so if average owner's equity is 525,000 here, okay, you're going to take it times 3.5% to get to your net profit figure of 18,375. So you used this return on average owner's equity rate percentage to calculate that. Okay, then the next one, briefly explain 2 strategies which Mr. Idle could implement to increase his net profit. Okay, anything to do to make more profit, you can write as an answer here. So you could sell more, okay, you could decrease your expenses, you could increase other income, you could increase your markup and maintain sales level, and so on. Anything that will give you a higher net profit figure. Okay, they then ask you, they tell you the debtors collection period is satisfactory. Is the statement true or false? And give a financial indicator to support your answer. Okay, you need to look at debtors collection period compared to creditors payment period. So if you look over here, it's taking your debtors 102 days to pay back, but you are only given 90 days to pay back your creditors. So that means it's not satisfactory. And secondly, it's increased, so it's taking longer because debtors are now taking 102 days compared to 95 days last year. So the statement here is false because debtors collection period is 102 days. It's greater than creditors payment period. And then, as I said to you, you could also have used the thing that it's increased from last year to this year. And then there's two ways in which the debtors collection period could be decreased. You can charge interest on overdue accounts. You could offer settlement discount for prompt payment. You could send reminders and so on. Okay, then the next question asks you to calculate current assets and trading stock. Okay, you are given your current ratio here. You are given your current liabilities here as well. So you're going to take your current liabilities of 420,000 and you're going to times it by 2,3 is to 1. That will give you your current asset figure. So you took your current liabilities and you multiplied it by this 2,3. Now when you're working out trading stock, there are two ways of doing this. I think you should follow the way I'm about to show you now because it's quicker. The only difference between this current ratio and asset test ratio is this asset test ratio excludes stock. So if the ratio when you include stock is 2,3 is to 1 and when you exclude stock it's 0.8 is to 1, the difference between those two numbers will represent your trading stock. So it's quicker to just take your 2,3 minus the 0,8 to get 1,5 and then take your current liabilities and multiply by that 1,5 which is 630,000. So you're answering this in a quicker way than you would if you worked it out using your asset test ratio, got that number and then subtracted it from your current assets. Okay, and then the next question is give two reasons why Mr. Idle will be satisfied with the period of stock on hand. I should have actually said right at the beginning that they sell outdoor furniture. Okay, so they sell luxury outdoor furniture and accessories. So if you look at your stock turnover rate or your period of stock on hand, the first thing here is it has decreased. So therefore you're selling stock more quickly. The second thing as well is because you're selling luxury items, they're not necessities. The fact that the stock is sitting in the store for about 3 months, 4 months is not that bad. So what I wrote here is the decrease from 150 days to 120 days, and that outdoor furniture is not going to become obsolete in that time. It's not seasonal and so on. And then the next question was the difference between solvency and liquidity. Solvency is your ability to repay all your liabilities, your total liabilities, using all your assets, your total assets. And then liquidity, that's the ability to repay your current liabilities, but using your current assets. The next question, a business with a high debt equity ratio is regarded as high risk. The reason for that is because if you've got a lot of debt, that has to be repaid together with interest. Those are compulsory payments, so therefore you are at more risk because you might struggle to pay those back. Then the intended markup percentage of Lazy Days is 150, but they only achieved 115%. Give two reasons for this. You could have had markdown sales, recording of errors, and so on. Okay, so in summary, remember please quote actual figures and percentages in your answer. Okay, that's it for now. Thanks.